Good afternoon and evening, probably for most of you, but not in America, where we've just joined the America session of the Global Energy Outlook Forum. I'm delighted to have joined me to open up the next 3 hours of discussion. Ms. Nadia Wiggen, Director of Svelland Capital, and we're going to be discussing whether energy is now a core long rather than as just a cyclical trade. You know, what enthusiasm is there for the funds or otherwise to look at that as a long trade, essentially. So Nadia, welcome, and just I'll come to you with the first just general question. You know, are we moving? Is energy moving back into the center of sort of global portfolio construction? And we can delve into which parts of that perhaps look more positive, if so.
Absolutely. I would say, in general, the interest in energy from investors is rising, for commodities is rising. And this, what everyone wants to know is which part of the market should they be involved in? Is it oil? Is it gas? Is it LNG? Is it batteries? Is it grids? And what are the materials necessary to develop all of that, as a functioning trading market? What is the infrastructure, and which companies are placed? And I think it's very important when we think about the world that has become more divided regionally rather than being completely global, that we have to really look at the markets in terms of Asia, Europe, and the US. Though, of course, in oil and LNG, we will continue to have this broad global effect, but things are becoming much more regionalized on the rest of that chain.
Absolutely. Well, I mean, let's just start with oil. And that is looking pretty negative from what we've seen. Obviously, we had, I mean, in the year that's just ended, we had an average oil price of $69. Of course, it dropped throughout that year. And people are, sorry, excuse me, in the year ahead, forecasting an average of about $60. So it's on its way down, which would say, okay, perhaps it's a good investment to go into because the only way is up. Would you agree with that?
Well, I think we have to look at the disconnect between the E&P companies, the producers, and actual oil prices themselves. And what we saw last year, yes, oil prices went down, but the big E&P companies increased in share price. And that's not only the American companies, it also includes European companies. You know, like Eni was the highest flyer last year, up over 30%. And that is when, investments in the E&P space, typically you're looking at a longer term trade, 12 months ahead. And what this indicates to us is that investors are already thinking about the next leg. Yes, we have a acute oversupply right now in the first quarter. There is some faith that we will not have a complete mismanagement in the market by OPEC, meaning that they want to break other producers and go solely for oil share. If they were to do that, it will be temporary. And that they're looking at the end of 2026 balances, end of 2027 balances, end of 2028 balances. And that's where the investments are flowing right now.
Okay, well then, I mean, moving away from oil, let's look at other sort of areas of the energy chain in terms of we're going to see some big money flow into. We've just mentioned obviously a bit of upstream oil. I mean, let's talk a bit about gas and I think more so about electricity because that's obviously in the headlines, isn't it? The whole AI demand trajectory that's unstoppable, it seems, and electricity and grids, etc., are all playing catch up, aren't they? As is battery power. So what money could be attracted into that sector?
Yeah, so if we start with power, because that, of course, demand can be filled by a variety of resources, right? So what we see, even in a country like Norway, which is where I live, we see a doubling in the growth of data centers, right now. And Scandinavia, it makes sense, right? It's colder, it's good, in terms of being able to maintain data centers. And of course, we have a lot of natural resources such as hydropower to facilitate that, wind, even offshore wind, as well as solar power is a part of that system here. However, we are still within a region of Europe, right? And this is where you have electricity cables between Scandinavia, the UK, to the continent, and so forth. And this is where it is a community. Now, the first thing I just want to bring up, because we've come from the oil part, is that we have security risks, right? These cables are under threat. We
Mhm.
know that Russia has spy ships, the Yantar, going around. What we saw now in the latest drone attack on a dark fleet ship is that it was actually carrying military weapons. So this relationship on the power side cannot be taken for granted right now, where we are geopolitically, and we've seen it where we've had trawlers, just break the cables,
Yeah,
off of Finland, things like that. So that is one thing that there's much more concern about having local supply of power. Then what happens, and this we discussed at the conference in Fujairah a couple months ago,
yes.
is that it's much easier to maintain a microgrid of electricity, right? Where you have a smaller supply center and a smaller demand center, and then that works optimally. As you broaden that out, it becomes much more difficult to handle the intermittencies, the supply surges that you get of solar power, for example, in the summer when you have lots of daylight, you get negative pricing in power. And then in the evening, when everyone wants to have dinner at 9 o'clock because it's been so hot, then you get this demand surge. And that's how you can get outages and overwhelming of the grid. And we saw this happen in France a couple times. In Spain, we had,
Spain,
but
of course.
of course, completely going out. And this is where it is quite problematic to have an entire large system. So this is where what we've had in the fourth quarter. Finally, France actually was the first mover in that they've created legislation to encourage building out battery backup systems along with solar. Because the way the tariffing has worked on the grids is that if you are a solar power producer, you pay on your way in and on your way out with the grid. So as a result, you're disincentivized as a solar producer to also have a backup battery system to
Right.
handle that. Now they're creating this environment where you are encouraged to build that. And we expect the rest of Europe to follow suit in this regard. And then we will have that alongside to help with that actual renewable power. However, we still have the issue of when you have these peak demand periods of power. And that's where it's very important. And historically, we've been able to rely on either natural gas power generation or even backup diesel power generators
And what about,
to
sorry, Nadia, to
help
interrupt.
with
What
that.
about, okay, and what about I mean, just kind of in parallel, what's enthusiasm are we seeing for the whole nuclear rebirth, if you like? I mean, the nuclear power has had a bad name because of the incidents we've had in the last few decades, but again, making a comeback here where I'm in the Gulf. We've got one or two plants being completed. Japan is even bringing back some of its reactors after Fukushima. France has historically been, for example, a big nuclear. So is that now becoming again? Is money coming into that sector as well with with the technology that we have now, which enhances the safety of that?
Absolutely. There are so many projects going on around the world. The only question is how quickly will they
Yeah.
be completed? And as one MIT professor expert says, at least when we look at Scandinavia, for example, at least one of these projects will be completed in the next 5 years. And
Okay.
yet we have, so many ideas and so many studies. So that will absolutely be a part of it. But right now, we have existing coal capacity and we have for power, and we have existing natural gas capacity. Now, when we look at the CO2 markets, in Europe, I think that is quite a telling tale. What we've seen is a huge disconnect in pricing. In the fourth quarter, and especially in December, we had natural gas prices, TTF, collapse in Europe, while CO2 prices continued to go higher. And they were, at this kind of price of 60 euros per ton. When we look at the ambitions for um, net zero, renewable power generation, and so forth, we believe that CO2 prices could actually rise to
Yeah.
100, 150 euros per ton. And What
In
we
what
worry
period? In
is,
what period of time?
well, in the next 2 years, so over this
Okay.
year and next year. And what that could do is create paralysis on the part of governments in terms of enforcement. And that could push us back. And why are we concerned about this already now? Because when you have the CO2 price rising and the natural gas price collapsing, it shows that what has happened is we've already switched everything we can
Yeah.
to natural gas away from coal, right? The arbitrage is there. And so this is where it is difficult. But of course, we have the growth in LNG coming. And that over the next 5 years will make an enormous difference. We had in the second and third quarter huge growth in capacity of LNG coming, especially from the US. It slowed down a little bit in the fourth quarter. We have more, Corpus Christi things coming up in the
A lot
US
coming
again
online at
this
the
year.
end of this year, at the end of 26 into 27. I mean, could
Exactly.
we see a collapse in prices there because of these sort of big projects that are coming online globally?
There is the potential. I mean, we have, of course, the North Field in Qatar moved out a little bit. So initially that was supposed to
Yeah.
come started this year. So now it looks like US is coming first. Then we'll have more coming in Qatar, but going again towards this regionalism. It looks like the US
Mm.
European relationship in terms of LNG is very close right now.
Yeah,
The
I mean,
arbitrage,
is that
yeah.
a good thing or bad thing for Europe? They have obviously the US is pushing its LNG as it's pushing everything in terms of energy exports, but Europe has just replaced their reliance now on the US as opposed to Russia. That puts Europe in a very vulnerable situation, geopolitically speaking, given what's
But the
happening.
contracts still with the US
Yeah.
are very flexible. So they can redeliver those. They can ARB and instead take other contracts. And this is where the US entry point into the market has made even Qatar much more flexible in terms of the way they sell that new LNG coming online. So again, it should work much more like the oil market. And we don't have the problem with LNG of crude qualities and things like that. So it should work as a global system. At the same time, we had a big increase in pipe gas from Russia over to China. We've had an increase in domestic production in China. And even
Yeah.
when we saw that prices came down, up from the highs of 14, $11 per MMBTU, we haven't had that demand surge. And when we look at, for example, demand in China right now, it's very difficult for people. It's very difficult for farmers because they're no longer getting the subsidies locally that they have historically. So as a result, it's eased off the pressure on pricing. So it allows other South Asian countries and Asian countries to get involved in this market. It makes it easier, of course, for Europe to be in a more competitive spot and not have to pay as high a prices for LNG as historically. And the US, they're bringing on these projects and they're still able to produce and export. That's not a problem right now.
Okay, and Nadia, just sort of looking at the, so we're talking a lot of physicality here, and you're giving us a great update and summary on whether it's sort of, I suppose, regional and across regions, where the potential is, where the investment is, and capacity. Looking at it purely from a financial funds point of view, because of course you have funds investing in all sorts of commodities and energy as sort of inflation hedges. Where we're looking at a scenario where some people are worried we're going to go back into higher rates of inflation as the US reduces interest rates, but in terms of sort of portfolio positioning, is energy are these is energy secure long in that sense? I mean, yes, you've described all the sort of activity and investment and need for it, but from a purely financial positioning point of view, is that going to be in terms of the, I suppose, percentage of portfolios in the year ahead compared to last year, would you see that a significant difference there?
We expect to continue to see flows into this space. However, the
Okay.
volatility of the last year, I think, is something that investors are having to come around with, to come to terms with. When you look at the copper market, right? Copper,
Yeah.
aluminium, extremely important to build out grids and this kind of infrastructure. Extremely volatile with reclassifications. What is subject to tariffs? What is a critical mineral? Things like that. I think as we get these terms agreed, then the market will be more stable in that regard. When we look at silver, yes, we still see
Huge
demand
run
for
this year.
solar,
Yeah.
for solar panels, and silver is very important in that. Now, it's down 4.5% today. I mean, these are massive
Yeah, but
moves.
it's been up, I don't know how
Yeah.
much, but it's had a huge run, hasn't
Yeah,
it, along with
yeah, yeah,
gold?
yeah,
Yeah.
yeah. Absolutely. And that's the part that, I think investors have been a little bit scared of. I think as they see, we're going to get probably on January 19th, that's the rumor. What is the final list of US critical minerals in terms of
Okay.
what needs to be done? We're getting this from the European Union, what needs to be secured, batteries, where do the commodities need to come from, so forth. So that should calm down investors. And I think there is a belief that this AI actually is changing things. These projects are going forward. It's not just a quick .com hype,
Yeah.
because we see the companies investing themselves, and that gives the longevity. And this is where private equity is absolutely plowing into this, because they don't have to worry about the ups and downs as much as we do on the hedge fund side. But we see huge investor demand in this commodity space, and energy in particular, how to get in there and finding the best traders to place them in the right
Okay, well, so it's all very positive. Well,
opportunities.
Nadia Martin Wiggen, Director of Svelland Capital, I'm afraid we've quickly run out of time, but thank you so much for kicking off the Americas session for us of the forum, and for your insights on the investment into the energy space across the sector. Thanks so much.